Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, October 23rd, 2018. This is video number 2 today. I wanted to get this one out and keep it really short, keep this one for members. I get a lot of questions in the trading room, not just today, but on days where you have a security down big, whether it's a stock, an index, in this case QQQ, the markets, is it objective to short? The gap down today, we gap below. When we had a back test to resistance, as I pointed out in the first video, that was objective. And then in the video, I also stated a couple other levels that you could add, or that I should say would add objective, make for objective shorting ups. That was a bounce back to 171.50, which we've gone through, and of course that big 172.50 level that has defined or capped all the declines over the last week or so there. So we're coming up on that now, and I think in the video, yes, I did. I also mentioned here there's a little support shelf there, really in that midpoint of the range, about 173.68. However, this is the big level where I think if we're going to turn down, it should be here. It should be soon. Anything is possible. Again, I told you there's all this, the potential for these market-leading FANG stocks to hold up the market. And there's some other things I didn't point out. So I'm going to go through that in the video right now. First thing I want to point out is this near low in the Qs. A lot of I've said this all along that corrections usually don't look like here. Let me give you a clean board. They usually don't look like this, straight swoon down. Sometimes they can, but normally you don't get a straight swoon down and then a reversal up to new highs. Usually they look something like this. Like I said, they take the form of an ABC wave, or in some cases, and this is what I wanted to point out today that I did not point out in the other video, what the bulls are probably looking at, those looking to buy this dip, is a retest. At the very least, you have a sharp sell-off like that. You want to retest the lows or come near. Now QQQ is a little above there, just like back here. Remember we had this sharp swoon down, second one of the year. We started to rally, and then we came down impulsively again and reversed just shy of that low. So that was not a perfect test of the lows, but we'll call it a successful test. It was close enough. And then you have in SPY, you had let's draw it out here. A couple things to note. You had that sell-off. This one was a swift sell-off, but again, it was just it marked. This was just a counter trend rally with another test of those lows. So here was a second test of those lows a couple month or so later. We also had this sell-off here, right? Let me mark it here with this drop, a kickback rally, and then we came in and retested those lows again, came back in, retested it. So that's what I'm looking at here. And you can see in SPY, you can look at this glass half full or glass empty, half empty. It's up to you. In SPY, we have the bigger picture is this bear flag pattern, the sharp move down being the flagpole, bear flag, breakdown, three red candles so far, an impulsive candle. So that certainly fits the criteria of a bear flag. The only thing missing is a measured move, which would be roughly the distance of this flagpole. And I would also take us down to my targets down there to retest these lows from earlier in the year. But you have to look at both sides of it. We're still very overbought. I'm sorry, oversold. We were coming off extreme oversold levels, and now we're tapping that 30 level again. And at least on the RSI, not so much on the PPO, but on the RSI, that's potential divergence. Price is making a lower low, the RSI making a higher low. So this is what the bulls are looking at, a successful test here because we undercut the lows. Right, it was right there. We're back above it now. There's a big gap to fill, and QQQ, which sometimes happens, one index may fall a little shy. I've seen that many times before. Sometimes you undercut, and I say that a lot. That when you have a key reaction low, too many eyes are on it. You're almost certainly not going to hit that low to the penny. I shouldn't use the word certainly, but very rarely, as I say, one of two things happens. You either undercut it slightly, like we did so far today, or you reverse just shy when all the eyes are on it, which QQQ did. So I'm still maintaining the bearish case, but I want to point that out and then show you some other things to just kind of share my thought process with you, from doing this many years. All right, so when I look at the daily chart here, I see not only that we undercut the lows, but it was also support level I've had on SPY for a long time, 268.33. If you go through the chart, you can see all the reactions. So, what I'm going to do in a second here is go through all the sectors of the S&P 500 as well and show you that they are also at support. And so what I think we are at now is a potential, a very important inflection point. I didn't so much see it or think through it this way before, but the markets either rally now, they rally off support, they undercut these lows, maybe sucked in some more short interest, setting the move up for a powerful short squeeze. As I said in the early video, and I maintain this, there is a lot of work to be done. There's still a lot of overhead resistance, but I'm laying out all the scenarios here. So if we hold support, we have the divergence on the RSI, and we can, especially if we can park it back above the key moving averages, the 40-week moving average, and SPY is so far from the trend line, I don't see us parking it above there this week, but anything is possible. Anything. You've seen some big moves in this market lately, so don't underestimate it, what it can do in either direction. So there's SPY. I just wanted to really hit on these support levels we're at. Here's QQQ. I have a pretty big level at 169.60, give or take. Again, these are daily candles, so you can see we undercut it there and then undercut it again, but we're back above it. So we failed to take that out on a closing basis yet. And I think that's a pretty significant support level. You can see, again, it's not just a random line. We have a lot of reactions there on the line, a lot of reactions from below, some gaps back here, a couple reactions, reaction high. So that's that. So we have QQQ on a sell-off down to support, below some long-term support levels, but on a weekly basis, and all that matters, they still have plenty of time, especially with the big FANG stocks are reporting by the end of this week to snap back above there. So I know most hate to hear it, but this market can go either way. If my view changes on where it's going, and it could today. I'd like to see how today's rally. This is interesting, I think, because again, I've showed you these levels. There it is at 172.50. If we get much above there, especially come in and take out these next two levels here, that's going to be pretty darn bullish. It's going to put in a big green candlestick on QQQ and probably SPY and all that. However, resistance is resistance until unless broken. Today's move was pretty impulsive. As everything I pointed out, the financials have been selling off hard lately. Home builder stocks have been virtually crashing. There's a lot of ugliness in this market. And I'm still not seeing the big bid into the flight to safety assets yet. Gold was up today, and so were treasuries. They've faded some of those gains with the market rallying. So those are things giving me a little bit of pause right now. But again, if we reverse, let's just watch today. If we reverse and we come back down, especially if we take out today's lows and close below today's lows, very bearish. That's going to put some big red candles on the daily. It's going to be a knife through the heart of the bulls who are thinking this may be the bottom. That's it. I think by the end of today, I'll have a good idea. If they park it in between, somewhere up here, but not too high up, and somewhere off the lows, it'll keep us guessing, and that wouldn't surprise me at all with the big earnings reports coming. But let me just go through a few sectors and show you. Let's go through the sectors of the S&P 500. All right, so this is XLK, the top component, largest sector in the S&P 500 at 21%. So over 1/5 of the returns are going to come from these stocks alone in here in the tech sector. 68-ish, 68.09 is where I have that level, very important support level, I think. The bigger picture is we've had some breakdowns that triggered some powerful sell signals, and we have had a pretty healthy correction. That I can say that. It wasn't really any bigger or even as big as some of these recent ones, and I think that the charts indicate that it should be. I think there's more downside coming, whether it's this week or in the coming weeks. But we've had about a 10% drop. That's just a run-of-the-mill correction. And again, doesn't fit from what I've seen with some of these longer term trendline breaks, but we're still dancing. As you can see it right there, that red line is the 200-day moving average, 40-week exponential moving average. We undercut it once. All we want to see is have that lost with conviction on a weekly basis. Right now we're under it, back testing it from below, and you can also see here some resistance. So again, I'm going through this video because I get the question, where's it objective to short? This is objective. I know I'm saying the market can do this, it can do that, but when I say it's objective to short, and again, this is my opinion, do what you want, objective levels like XLK, I'll get to the semis here in a second, you're shorting on a bounce back to resistance, you're shorting on a bounce back to the 200-day moving average with a stop somewhat above. It doesn't mean short and throw away the key in case we have a ramp up to new highs. That would be foolish. Objective just means you short here, your downside is minimal if you're stopped out just above compared to the profit potential if we do reverse and we get that other 10% or so drop that I'm looking for in the markets. So that's my opinion of objective. It always the qualifiers are yeah, you have to find an objective entry spot where you can then quantify and keep your losses tight. XLK has no business getting back, especially back above this trend line. I mean, anything's possible. We already backtested it once. Maybe we backtest it again. Maybe you're okay with a 5-6% stop because that's what it would take um, to get there and backtest that line once more and then turn down. So there's a lot of scenarios. So when I say objective, you have to then quantify, okay, what's your price target? If you're only shooting for 65.30, do you want to risk 5-6% to make, I don't know what that is from here, maybe 5 or 6? Probably not. But do you want to risk 5 or 6% to make 15, 10, maybe 15% or more? That's up to you. At least use a 2-to-1 RR, meaning risk $1 of loss for every $2 of potential you're going for. 3-to-1 RR is better. That's optimal. I usually shoot for at least a 3-to-1, but it depends on the trade, of course. All right, so there's XLK at support. And the other thing I wanted to say, and I'm going to just now rifle through the rest of the sectors, and I'll look at a couple other things, biotechs and semis that aren't, they're subsectors, if you will, of the some of the sectors in here. But what will happen is if, and this is what I think, if we fail here and we move down today or sometime this week and we break the recent lows, we break these supports, that could trigger that waterfall type sell-off because what will happen is, this is a second so far successful test of those levels, this level and the other ones I'm going to get to. So that's what the bulls want to see happen. That's what those that are buying this, seeing that, okay, well, that level held so far, I can step in and buy with a stop below. If that doesn't happen, if that gets taken out, that is quite bearish. And then I think we get that another, like I said, impulsive leg down, and you can see it in XLK. You're talking another minimum 10.5 or so, up to about 12% if this target zone down here is hit. All right, so that's XLK, XLY, consumer discretionary, already broke trend. That's bearish technicals. I don't care how you spin it unless they can rally this back up. That is a breakdown, clear check marks across the board, in my opinion. We had an impulsive move down to both price support 107.45 and the trend line. The trend line goes back away. I believe it goes back to the left of this 2-year chart. So there it is, an impulsive breakdown of both those levels after a period of consolidation. This was healthy. Had we not had this, had we not had that consolidation, if we just sliced down right here and then gone to this point, I would say I would be skeptical of that breakdown. Why? Because we would be too oversold here for me to comfortably take a breakout. Just as I don't take breakouts on the long side, if it takes a security rallies up 20, 30% to a resistance level and then pops above it, but it's extremely overbought, I will hold off and wait for a pullback and a backtest to that breakout level. If I don't get it, no big deal, I missed the trade. But so what my point is, when you have consolidation after a big move down to support, it was this consolidation here for a week or more that helped alleviate the oversold conditions, and that opens a door for a bigger move down. So that's still my preferred scenario. There's next target XLY. This is a big sector, over 10% of the S&P 500. XLC also about 10% now. This is the old telecom sector. It's now called the communication sector. It's new, so we have to go to a 60-minute chart. I can't give you a whole lot here. There's some overhead levels. It still has a lot of resistance to work with, but we don't have a lot of charting history on the daily chart because it is new. Industrials. Industrials broke down today. There's a lot on this chart, I know, but just focus on this yellow trend line right here that I have highlighted. It goes all the way back here to late 2016. Very well defined, and we just broke down below it. So there is some support coming up right here. I have to say that, but there's about a 10% weighting in the S&P. Utilities are small, but they have run in. It's only less than a 3% weighting, but they've run into this downtrend line that I've highlighted before. In fact, the last time I highlighted this, I think it was in the trading room, I said they were an objective short here because they had broken down and rallied back to that trend line and they had a wave down, or maybe it was here when we hit it again. That might have been it most recently. So once again, another rejection there on that downtrend line. But again, that's not going to have a big impact because you're talking less than 3%. So let's not spend too much time on XLU. If you want to trade that individually, great. SDP, I think SDP, Sam David Peter, is the 2 times short, if I'm not mistaken, for utilities. XLP, not too much to talk about here. Let's just move on to the next one, just to talk about things that I see something worth mentioning. This one is XLB, Basic Materials. Not a huge weighting, but pretty important for the economy too. To give you a cue, there's a pretty important support level. We hit it there, and we have a nice doji printing off that level so far today. So here's a common theme. We have quite a few sectors deeply oversold at support, but if those support levels give way, that opens the door for the next wave of selling because buyers should be, at least for XLB, they should be stepping in here. Oversold at support with a potential reversal candle so far. But again, small weighting in the S&P, so it doesn't really matter much what XLP does. Healthcare, this one's big, 15% weighting. I believe this is, I think, the second largest sector, close to it. Breakdown, it's looking pretty ugly so far. A lot of us like to trade the biotechs. That's a subsector of the healthcare, and they also hit support today. And this chart has a lot, but if let me try to show you what stands out. And I may have a cleaner board here, but these two lines right here, 8243 is the uppermost. That's a pretty decent support zone. So there's some cross currents on XBI. We have on the longer term, you can see this trend line off the early 2016 lows, and that was recently broken. It was broken impulsively, so we're below that, and that puts the biotechs in a very precarious technical posture right now. Let's see if I have any other boards. I haven't really marked this one up in a while, but you can see there's that same support level I just mentioned we have fallen to. All right, that was healthcare. Oh, energy. Energy, I pointed out the breakdown in crude today. Energy used to carry a much higher weighting in the S&P. It doesn't so much anymore, but it's still a substantial weighting, about 6%. And this one I pointed out with crude oil in the trading room and XLE, crude hitting multi-year long-term resistance recently, and that was where crude topped. So I mentioned that as a swing shorting op, USO or crude, and it's reversed, and you can see what it's done to the energy stocks. Obviously, just like gold follows a dollar or GDX follows gold, that's a more appropriate analogy. XLE follows oil, and so watch, rinse, repeat. This isn't rocket science. You talk about objective shorts. You short at well-defined resistance with a stop somewhat above. Um, and if you're stopped out, great, you lose a little bit. But if the chart plays out as it has every other time we've hit that level, you make a decent trade. Now we are coming up on support right here. That's not very well defined. There was a lot of choppiness, but I've had a line there for a while, about 67.13. But if that gets taken out, and remember, in a strong downtrend, just like a strong uptrend, levels do get taken out. So we could come all the way back down here to about the 65 area, I think, no, 64 area down there. Here's the REITs, another sector of the S&P. Really not going to affect it much because of weighting, but we were able to swing short this one down via SRS. Got out. We didn't nail the bottom, but we got out close enough to it, and we would have given back if we didn't. So we hit my final target. But you can see what's happened here on XLRE. We bounced back to here's an uptrend line off the lows. So breakdown, a back test so far, back down to support, and yeah, I'm staying clear of that one right now. I'll let you know if I have any other thoughts. XLF, this is a big one. All eyes have been on financial, or should be recently. I mentioned they're really lagging the market, and so this wasn't just a tech wreck anymore. We have financials going down. These are all support levels, each line on the chart. And again, I haven't had time to really clean up these charts for this video. I usually don't like to show so many trend lines and annotation. These are the charts that I use and I'm looking at, and then sometimes I'll use a different board with fewer annotations just to show you the big picture, simple like a trend line break. There's a rising channel breakdown and then break of this support. But this stands out to me. That was a pretty important support shelf, a lot like the semis, which I'll get to here in a second. A lot of reactions here, and it looks like some consolidation. So the financials are broken down. And again, if the market can recover and regain a lot of these levels that I just talked about that were recently broken, that's quite bullish because fewer things in trading are more bullish than a failed breakdown. Shorts pile in, longs that are weak-handed longs that really, don't know if they want to hold the position or not. They get shaken out, so then you have just a better core of longs that are holding on. If they rode out that, they're certainly going to continue to hold once it reverses. and the shorts get squeezed out. That's not the case right now. You got to take these things on face value. So far, it's a breakdown, and the most objective level right now, if you get a kickback in the financials to that level, you could short it. But I would say to only do that if the broad markets confirm, if the S&P 500, QQQ, because if they start to have some bullish developments that look like we're getting a reversal there that might have some legs, you don't want to go trying to milk any more out of a short on the financials. In fact, you'd probably expect that level to get taken back. Okay, and last but not least, financials. I'm sorry, that was financials. Semiconductor stocks via SOXX. So it's been a long day on top of a very long week. Last 2 weeks have been busy. Not getting a lot of sleep lately. SOXX. There's a lot on this chart. I'll give you a clean board in a second, but most importantly is this level here around, we'll call it 165 up to maybe 166 because there's some reactions recently above that level. Very key level. So we broke it today. We're back testing now. I've mentioned this on the front page under the SOXX trade setup, as well as on the within the trading room, that a bounce back to 165 to 166, somewhere in that area. I wouldn't add much above that, but I still think that's objective level to short. Here we can move this trend line here. Basically that's it. It shows it pretty clean. This is, oh yeah, oh, I didn't mean to move that. That was my stop. This is the official trade here. So there it is. There was the level that was broken. Yeah, 164.99. Let's make that even 165. Let's color that yellow because as we shorted on the breakdown there, and we're a hair above it now, or are we? Yeah, 166.43. But again, the day is young. We're either going to regain this level today, and if so, personally, I think I can't tell you what to do, but when I to put out a trading plan, whether I take a trade or not, yeah, I have a trading plan. Whether it's an official trade on the site, most of which I take. Sometimes, like in the case of stocks, I'm already in there and been in there for a while. But on a bounce back um, to anything above the stop level, if you took it, and your target is, let's say, you're targeting a move down here, stick with that trading plan. Let the charts have time to work out. If one thing this market has shown us recently, it is whipsaw signals. So maybe today's breakdown gets bought up. We move back above some of those levels in the market and in stocks. We rally a little bit, but then we turn back down again. So this any recovery back above this level in a solid close. That's what I'm looking for. We'd need to close well above 166 today. Otherwise, it's too close to that resistance level or support level. Well, now resistance depends if you're above or below it, to really say that it's been taken out with conviction. Because when volatility is high, you get these price swings and you're going to move up and through and below support and resistance levels. So you got to give it the benefit of the doubt. So that's that. Those are the levels I'm watching. And again, I laid out both scenarios. So, this week may continue to be tough. I've expected it going into the week. I said, expect some whipsaw signals, choppy trading. Um, because of the big market leading FANG stocks that are due out to report later this week and with Apple next week as well. We may see the market just continue to grind and have these big back and forth swings, or it could go either way. I wish I could tell you, which one's going to happen with a high degree of confidence, but right now I can't. If we didn't have the FANGs in front of us, and these recoveries don't happen today, if we turn back down and close back towards or below the lows, still lean towards that downside, much more downside in the coming days to weeks here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.